Hello, good afternoon, and welcome to our webinar for today. In the Netherlands, it's a little bit vacation time, so I don't know how many people will join us, or maybe people will join us a bit later. We will just start now at 4:30 because that's what we planned. We will talk to you today about the VIDA proposals, part 3. The single VAT registration, and that is a part in the proposals that has been discussed a lot already by other people as well, and also has been highlighted by the European Commission as one of the ways to make it easier for companies to do business in Europe. But what we will show you today is it's not just creating a better scheme for businesses, but it's also focusing, of course, on the reduction of fraud. That is still the main purpose of all the proposals. So without further ado, Paul and I are saying welcome, and we will start the presentation now. And meanwhile, I'll let people in. So as I said, we have the whole webinar series set up, and the first 3 were already done. If you want to look them back, please check your email if you have received a look back link, and otherwise just send us an email and we can send you the link so you can still look it back. Today we will actually talk to you about the point 4, the single VAT registration, and we would like to start with you with some famous words of the Dutch tax authorities. The Dutch tax authorities have said some time ago as their slogan, "We cannot make it more fun, but we can make it easier." That's the whole taxation scheme in the Netherlands. I'm not sure if that's only applicable to VAT, but they will just tell it to everybody that it's not fun, but it's easier. Obviously, if you talk to us, we will tell you that VAT is always fun.
But not easy.
Not easy. And I think that perhaps many of you will also share that thought with us, that indeed it's not always that easy. The European Commission proposals are aimed to making it easier in some ways, and yes, we do see some things there that may actually benefit you, but it's still not very easy. So we will guide you through it. And meanwhile, if you have any questions on the presentation, on the proposals, or anything else, just let us know in the chat box. And at the end, we will also leave some time for you to to ask any questions.
Good.
So what is the single VAT registration actually doing? It's a separate part in the VAT proposals, in the VIDA proposals. And what they are trying to do, the European Commission, is reduce the number of VAT registrations in Europe, in a way.
It's the best part of the whole package, I think. If it really works, then it would be great. It would save a lot of hassle and all kinds of compliance costs.
Yeah,
I think there was a report of the European Commission a couple of years ago where they highlighted the amounts or the numbers that are linked to the cost of compliance on a country basis, and just having a VAT registration in place and submitting quarterly VAT return and some listings and those kind of things would have an average cost of 6,000 to 8,000 euros annually.
Yes, per year.
So
yeah.
that's what we are talking about, and then we are not even talking about all the hassle and the communication issues that are there, and emails that get lost and figures that are wrong and all those kinds.
Yes, and of course,
our daily practice, boss.
Yeah, and of course, a very important part, especially for companies that have multiple VAT registrations that are using an ERP system.
Yeah.
Every time that you have to adjust a tax code or add new ones or make some logic in your system, that's taking up time internally, maybe also externally from advisors, consultants, etc. And yes, the European Commission mentioned an amount of 6,000 to 8,000 euros a year, but that's purely just a VAT representative and compliance.
Yeah.
If you add up all the costs that a company may have by adjusting their systems, by setting up internal processes and procedures, by hiring people to do it, etc., it can easily go up to 60,000 to 80,000 euros. That's what has been mentioned before. Yes. Yeah. So if you can reduce the number of VAT registrations, that's of course a great thing.
Yeah. Which is good. And what about the ERP system setup then, boss? Because is that a remark which is linked to the proposal to have a single EU VAT registration and dealt with your VAT requirements on a single scope, or is it in generally something which you envisage as some kind of change there?
Yeah, well, if you have a VAT registration in any country, you may have to make sure that you keep that you have a bookkeeping. And a lot of bigger companies use an ERP system or another bookkeeping system, or some companies just use Excel, which is also in a way a bookkeeping system. But if you have a complex organization, you also need a system that is able to deal with your complex transactions and multiple VAT registrations, multiple business units, etc. And an ERP system, to set up an ERP system correctly and efficiently, that is really difficult. It can be very difficult.
But purely moving from multiple registrations with multiple outputs, different outputs, to one single registration with one type of output, that really impacts your ERP setup as well.
Yes.
Okay.
Well, because the thing is that you still need to have separate tax codes for each country that you are having activities in.
Yeah, I would think it doesn't change a lot. It's the output which changes.
Yeah.
The administration as such would remain the same.
Yeah.
I expect it. But
yeah, no, you still need to have all your transactions that you have in your company. You have to identify them. You have to apply the logic to that, and make sure that the output is correct, the reporting is correct, the invoicing is correct. So yes, definitely there will be some changes in ERP systems or in any bookkeeping that you keep. By making sure that if you switch from multiple VAT registrations to a single VAT registration, yes, in the end it may be easier, but there will be a big change that you have to deal with.
in your system. Okay, good.
Yeah.
Let's move. Yeah. Good.
So what the European Commission did is they learned from the past, which is always a good thing.
Which means, sorry,
Yeah.
Bas, but that means that the single VAT registration is a one-stop shop VAT return submission.
Correct. Yes.
Okay. Nothing more, nothing less. It's just a shift to a one-stop shop.
Yeah. So instead of having a VAT number in each country that you have activities in and submitting a VAT return and easy sales list, etc., in each of these countries, the new thing is that you only have to submit one single declaration, and a one-stop shop declaration in the country where you are established.
Yep.
If you are a European entity or a European company, and if you are a non-EU company and you have activities in Europe, you have to choose, or you have to use one single EU country in which you report then all your sales transactions in Europe.
Yep.
That's the idea.
Yep. In the member state of identification.
Correct. Yes, and that scheme already exists.
Yeah.
OSS scheme exists, and we have some experience with that.
Yep.
In the past couple of years, and it's being extended now. That's more or less the whole idea.
That's the last mile, I guess.
Yeah, European Commission really likes it. They are very happy with the reporting and with all the information that is just centrally organized in this respect.
As of day one, Bas.
Of course.
Day one.
So they now want to implement this for everything almost.
Yeah.
So where it was only used for B2C transactions, they are also looking at B2B transactions now. Where it was a special thing that is being added is transfers of own goods. There's going to be a special OSS scheme for that one. I'm not sure what it will look like. Nobody really knows what it will look like in the end. We only have experience with the current OSS scheme and the current OSS reporting. But they are talking about a special scheme for transfer of own goods, for example.
Yeah, well, it means that they are including other taxable events for VAT than purely the supply of goods or the supply of a service to the same scheme. So all the taxable events are able to be included in the one-stop shop scheme.
Yeah,
which is a challenge, because then the one-stop shop reporting form, or the VAT return itself, should be changed as well.
Yeah.
Well, that makes, for instance, for some tax authorities, that's a big issue then.
Definitely.
Because then you need to report under the one-stop shop scheme your inter-community acquisition in Germany.
Well, that's going to be the question indeed, if that's going to happen, yes.
If they want the OS scheme for transfer of own goods, that should be the case then.
Well, the thing is, and we will come back to that later, how that will be reported, but it brings back memories about the whole conversation and the whole discussion about the standard VAT return form that the EU wanted to implement some years ago.
The one
Well,
pager.
Exactly. We all know how that ended. It was one page for people who don't know. But the page was very, very small font and double-sided, and it was really, every country wanted to have its own stuff in there, and in the end, it didn't make it because it was too difficult to get all the member states in one place. So I think maybe you can look at this as another try by the European Commission to get one single VAT registration, or sorry, one single VAT declaration.
Yeah, it's a good try.
And trying to get everybody in the same format.
I think it's perfect. And you just build up from, let's say, accepted parts of it, and then you extend them. But that would mean that this should be the last extension done, or are there still some events that are not tackled to include it in the one-stop shop?
Well, let's have a look at some examples that will be included, and then maybe afterwards we can check what will actually happen after that. Okay. So this was more my overview and say, well, why are they doing it? Because they say it's going to save them billions of euros, and not millions, but billions of euros. And it goes from 6 to 8 to 11 to 23 or whatever billion euros in 1 year, 2 years, 5 years, 10 years. I mean, they really throw around a lot of euros there. Yes. But what it comes down to is the European Commission really believes that it's going to get a lot of extra money in. And also it's going to be easier, and they see great benefits for SMEs, for small and medium-sized enterprises. And we are not sure if that's true, but we can discuss that.
Let's do that. Let's do that. I don't believe it, but okay. Yeah.
Let's look at some specifics that are being linked to this single VAT registration thing. Right now, if you have an activity, a taxable activity in another EU country, or in an EU country, that means that you have to register in that country. And normally that means that if you make a supply, if you sell something in a European country, you have to charge VAT.
Mm-hmm. Local. Yep.
There are some EU countries, including the Netherlands, where we have a special domestic reverse charge mechanism, which means that if you are not established in the Netherlands and you are making a domestic sale to a customer in the Netherlands, you are not allowed to charge VAT, but your customer has to account for the VAT.
If he's a taxable person.
Exactly. And that is a special rule, and the Netherlands has it. Some other countries have it. France, Finland has something like that, etc. But what the European Commission now proposes is to implement that in all EU countries.
Mm-hmm. Mandatory.
Well, that's a bit interesting because it actually says in the text of the proposal, it says member states shall allow parties to do it.
Ooh. That's
And yeah, we don't know actually what that means.
You should ask somebody from the UK who's probably better able to explain
the English wording. Yes. Well, what we know right now, I mean, we have been speaking to the European Commission in different conferences and those type of gremia, that it probably will become mandatory. Because member states themselves also were reading this text and they say, well, what does that mean? Can parties choose to do it? Can member states choose to do it or not? And member states say, well, let's just make it mandatory. So it's very likely, it's not yet literally in the proposal, but it will really be very unusual if they don't accept it to become really mandatory.
Okay, there is a lot of discussion amongst tax advisors in Europe whether or not this extended reverse charge mechanism triggered again another type of fraud. So yeah, there is some doubt whether or not it should be a mandatory reverse charge.
Yeah, yeah, and if you think about it, the reverse charge mechanism was initially implemented years and years ago to actually combat fraud in a way. Because if you have a foreign supplier and they're selling something to an established company who is known and registered with the tax authorities, it's very easy for the local tax authorities to go to the established company instead of going to the foreign tax authorities to chase the foreign supplier. Yeah,
systematically it was one of the opportunities to use it for.
Yeah,
absolutely,
exactly. Now, the interesting thing is that if you look at the law, at the new proposed law, they say, okay, well, Article 194 is changed, and that will become then probably mandatory. That is the reverse charge mechanism. But then if you read the new Article 222, it also mentions that you have to issue an electronic invoice and you have to report your transaction via the digital reporting requirement.
Yeah.
We mentioned that last time.
As a kind of an audit trail or something.
Exactly. So that means that initially the European Commission said, okay, well, we are able to implement new rules and to make it mandatory for member states to implement those rules for cross-border transactions, for inter-community transactions, because that is what they are able to say something about. Now they're saying the domestic reverse charge will change. The e-invoicing and the digital reporting will actually be applicable to domestic reverse charge mechanisms, so also to domestic transactions. That's going to be interesting. And it also means that non-EU suppliers that are completely outside of the EU system and who may be making now domestic supplies in a country, that they will have to apply the domestic reverse charge mechanism and apply the e-invoicing requirements and the DRR. That was one of the remarks that some parties made when the feedback was given to the European Commission on the proposals, whether that should be the case.
Yeah, that is questionable. Yeah, at that point. Okay, well, I think this is one of the topics that might be one of the discussions still on the table. There are a lot of this already dealt with, and I think it's all fine for member states, but this one probably will be a hard one to do.
Yeah.
Okay.
Yeah, and what you see here indeed is that this is one of the items that member states are discussing indeed a lot. Whether they want it, how it should be done, how it should be reported, etc.
Yeah, should be. Okay. Warehouses, yeah.
Yeah, sorry, yeah. So this slide actually shows you what in the reverse charge mechanism, how it works. From our daily practice, we noticed that this is for some companies, it's still difficult to understand how it works, and also how to set it up in the system, both from a sales point of view and from a purchasing point of view. So that's why I added this slide, just to explain how it should work.
Yeah. In practice, you see still companies struggling with, let's say, the reporting requirements.
Yeah,
absolutely. Yeah. Okay, good.
So yeah, this is what I mentioned just now. I mean, member states shall allow that parties apply it, which is interesting. And the other one is that yes, companies will have, member states will have to implement it if it's going to be passing through. But some countries will also have to adjust their own rules.
Yeah, like the Netherlands.
For example, the Netherlands, yes. Yeah. Because it only now says that if you are VAT registered as a customer or as a recipient, then the reverse charge applies. In the Netherlands, we do have an additional requirement, which means that the customer or the recipient also needs to be established in the Netherlands.
Yeah.
And according to the text of the new proposal, that's no longer necessary.
No, this should be amended, which is fine, because then we apply the Belgian scheme.
Yeah, or the French scheme. I mean,
that would be in favor of that one. So perfect. Yeah.
Well, at least,
but it makes sense, because you don't need an established taxable person. You need a registered one.
Yeah.
So the shift between being able as tax authorities to grab a taxable person to collect your tax due should be more relaxed. It's no longer necessary to find the premises or whatever where you can collect the tax. It should be an automated, digital, reported and book kept system for the registered one.
Yeah. Exactly.
And must be VAT registered. That means that if you link that to the single VAT registration and the OSS scheme, that's particularly then, well, okay, so that's something which is besides the single VAT registration scheme. Single VAT registration scheme is one way to collect the VAT due from the member states where the consumption takes place. Yeah. The other one that you still have taxable persons registered in other countries, so they don't benefit from the single VAT registration, and then they will be forced to deal with the mandatory reverse charge.
Yeah. Okay. Yeah, and I think that's a good remark, because maybe it's good to remind everyone that the single VAT registration it's not obligatory. I mean, you can still choose to have a normal VAT registration. in a country. And in some cases, you actually may want to keep your current VAT registration or even open a VAT registration, a normal VAT registration in another EU country. For more reasons than just this, but yeah, and we come back to that later.
Sure.
One of the reasons why companies may be registered now in multiple countries is that they transfer their own goods from one EU country to another. And these rules will also change. Again, indeed, it was not so long ago when the quick fixes were implemented.
Yeah.
That was 2020.
Yeah.
And before that, and still, the normal rule is that if you move goods from one EU country to another, you are making a deemed intra-community supply in the country of departure and a deemed intra-community acquisition in the country of arrival of the goods. And since 2020, there is a simplification that can be applied that if you move your own goods to another EU country and you sell those goods within 12 months to your party where you are storing the goods, if you have consignment stock in that, then you don't have to register in that EU country of arrival, but you can still report it as a normal intercommunity sale from the EU country of departure, and then your customer needs to report the intercommunity acquisition.
Which before were local requirements. So there was, I think, a lot of consignment stock schemes were already simplified on a local scope by a lot of member states, but with different requirements. Yeah. And now they harmonize European rule, and it works perfectly. Almost.
For people who don't see us on the screen, Paul is shaking his head now very much.
Okay. This would be better because I think it's really a simplification if you just report on the OSS your intercommunity deemed acquisition.
Well,
I think that's a simplification.
Yeah, what happens is and that's a bit unclear to me what you need to do, because you need to report the transfers of own goods via your OSS scheme. So that means to me that you need to report a sale, because that's an OSS scheme. You need to report a sale, but you don't make a sale. You only transfer your goods. So I think you need to report the departure and the arrival.
Both.
And the arrival is exempt from VAT. That is specifically mentioned in the proposal. So then I would think that subsequently, if you are going to sell the goods,
you don't need to report the arrival anymore.
Exactly. That's what I think.
It's just a departure as such.
And then I think what you need to do then is you need to report the subsequent sale in that specific country under OSS, in a normal OSS.
Deemed sale, because it's not a sale.
No, if you move goods from A to B and then you sell it from B to the customer, that sale in the other EU country, that you need to report that under OSS. Or with a reverse charge mechanism.
You can do it in a one-step approach instead of two-step approach. Okay, that makes sense.
Yeah, as you can hear and as you can see, Paul and I are talking about this, and we've talked about this before, and it's still something that we need to think about it, because the simplification and the normal rules, they exist already for quite some time. And maybe it's because we are so long already in VAT. But we are used to these old rules. So now with this whole OSS scheme and reporting it in a different way, it makes sense to really think about it. But if we already have to think about it, it probably means that you have to think about it as well. It's not as simple as it looks at first sight.
But just one remark then, Bas. The rationale behind the transfer of own goods scheme is that the tax authorities of the member states needs to understand where goods are actually stored. So if you move goods from your stock in the Netherlands to a stock in Germany, the tax authorities in the Netherlands and Germany must be informed one way or another that you move stock. And that's implemented in the requirement that you need to administer. So you need to have a register where you are administering all the stock which is on certain places, and you need to report in your VAT returns currently what is happening there as being deemed taxable events. And then the simplification of 2020 under the quick fixes for the consignment stock was that you actually don't have to do that if you have a subsequent domestic sale within 12 months.
Yeah.
And then you just have the administration part and not the reporting part. and you just report finally the domestic sale as an intercommunity one.
Yeah.
So you postpone the submission requirements and the VAT returns to the actual supply itself. That's the 2021. And now we are going to simplify it further. And then the idea is, well, we don't have to know anything about where the stock is. You just can administer it. We don't want to have it reported. And if you have your sale, just report the sale. Well, fine. Okay.
That's what it looks like.
But then I still think, boss, they need to adjust or amend the OSS return itself, because they need to do
Yes.
some kind of deviation.
Exactly, and that's to me, it's not 100% clear. There is right now, there is a template OSS declaration on which you have to report all your sales. So they will have to adjust that template. They have to adjust that report or that form. And they are also talking about a special OSS scheme for transfers of own goods. So maybe it's a different form. I don't know.
That makes sense.
And but that is not clear yet. I mean, the proposal only says that there will be an OSS scheme for transfers of own goods.
Yeah, I think it would be wise to make it a different form, because otherwise you are mixing actual sales with deemed sales in the same reporting data, which not seems to me very logical.
Yeah. So, meanwhile, any questions so far? I'm quickly looking here at the chat box, and I see that somebody asked a question already. What will be the impact on intrastat reporting? Is there no longer a VAT registration required in the destination country, but still the obligation to report intrastat arousals in the destination country? That's a very good question, and I hope that it's this slide. Yes, it is. It is.
It is. Yeah, it should be.
Because indeed, from a VAT point of view, it will be easier. But what about statistical reporting? Because as we all know, intrastat is a statistical reporting. And very often VAT people are bothered with intrastat reporting because it's somehow the same information that you need to supply on your sales and on your purchases and the goods, etc. And nobody really likes intrastat, at least I don't, from a reporting point of view. But in some countries, it is actually combined and really part of the VAT reporting. For example, in France and Italy, where you have to submit a combined intrastat and easy sales list. And in other countries, it's really it's if you don't do it, you go to jail. I've never seen that happen. But anyway, it's an economic crime.
Yeah,
if you do it. That's only China. If you don't issue invoices in China, you get beheaded. But that's a different story. But no, that's a good question. I mean, is it still necessary to register purely to submit a statistical report? If you look at the proposal from the EU Commission, then the VAT registration is no longer necessary if you follow the OSS scheme, because you only have to register in one single EU country to submit this OSS report.
They should simplify the infrastructure requirements as well.
It doesn't say anything.
Otherwise, it doesn't make sense.
Yeah, and the reason why it doesn't say anything about intrastat is because it is a statistical.
Yeah, it's not part of this type of legislation. It's purely the package, is purely the VAT only.
Yeah, exactly. So it's a very good question. We don't have the direct answer for you, but it is part of what we are thinking about as well.
I haven't read it in the comments, Bas, did you? Was it discussed with the Commission in one of those sessions?
No.
Okay.
No, not that I'm aware of.
No. Okay.
So, but I did mention it as a remark indeed as well. Yeah, so what will happen if you are using the OSS scheme? And it's a bit going back to what we discussed in the previous webinars. We talked about electronic invoicing, about digital reporting requirements. And it means that e-invoicing and reporting digitally is also going to be mandatory for reverse charge sales and also for the transfers of home goods. So that means that you have to issue the invoice within 2 days. You have to report then the transaction within 2 days after that. And that's going to be a challenge in any case. I mean, that's what we discussed in the previous webinar. But it's specifically where I'm looking at is that the non-EU sales or the non-EU company that makes sales in Europe and that may have to apply a reverse charge mechanism, they will also have to issue the invoice electronically and report it via DRR. That's one of the logical conclusions from the proposals.
Yeah.
So indeed, where the EU Commission focuses on intra-EU transactions, it has an effect on domestic transactions, I think.
Yeah. Yeah, you're right.
Yeah. So we are not going to cover all of the OSS things and all of the single VAT registration discussions, but we just wanted to highlight very briefly the other stuff that will be covered in the OSS scheme. So right now, if you are making B2C sales, distance sales, which means the goods are moved from one EU country to another, then you can use the OSS scheme. But if you make local transactions, so you're selling from a local warehouse to a local customer, or the goods are moved from a local warehouse to a local customer, that is not in the OSS scheme. And that will actually be included in the future also in the OSS scheme, which I think for some countries will be very interesting to do that. Because right now, if you go and sell via Amazon, for example, in Germany, the German tax authorities will automatically assume that you are making domestic sales in Germany because it comes from a hub in Germany and goes to a local customer.
Yeah.
In the future, you won't have those discussions anymore because they're all local, all B2C supplies of goods, whether it's cross-border or internally, can be reported in OSS.
Yeah.
The other thing that is specifically mentioned, and I'm also specifically mentioning it here, because the EU Commission uses it as an example, is the charging of electric cars. And the reason why that's mentioned is right now, if you are supplying electricity, that's a supply of goods. And if you do that locally, then every company that is, if you are as a consumer getting your electricity from a local charging station, that means that you have to pay local VAT. And all those electricity companies or car manufacturers, they have to register everywhere for those supplies. So in the future, that's no longer necessary. They can just report all those sales in one OSS return, still with local VAT. But that's going to be easier for those. Another one that's really interesting and very nice is installation supplies. Right now, if you go over to another country, you install something, you have to register there. Sometimes it's just one big project and you have to register for that single project, which is really a hassle. So in the future, you can just charge local VAT, but report it in OSS. And an interesting one is, of course, the supply on board of ships, aircrafts, or trains. I always come
we
across
dealt with such a train company, international trips. So we know what needs to be done with.
Yeah, exactly. So no longer local VAT registrations.
Yeah,
that's
very
going to
good.
be easy.
Yeah. Good.
I think that it's good to mention that the EU Commission, they are focusing on reducing fraud. That is their main purpose. And the VIDA proposals are focusing mostly on that. And
big selling point.
Yeah. Of course, they are also saying that it's you should also reduce administrative burdens, etc. But the idea of the single VAT registration, or maybe more the idea of the domestic reverse charge mechanism, is that there will be less VAT going around in the economy. Because if you don't charge VAT because of the reverse charge, the recipient will have to report a purchase and a sale, but that's a plus and a minus. So effectively, there will be no VAT payments anymore, or much less VAT payments in the future. That's one of the ideas why they want to implement a domestic reverse charge mechanism. There will be simply less VAT in the economy. And the other thing that they, of course, want to have is more visibility on the EU trade, but then probably also on the domestic reverse charge mechanism trades, so to say. Via the digital reporting, they will have way more information, but also very quicker the information available.
Yeah.
And linked to that proposal, the VIA proposals, there are way more initiatives. And one of them that we specifically wanted to mention today was the payment directive.
Yeah.
That's already in place, but it will be effective January 1st, 2024. And what happens there is that payment service providers, so banks, but also the PayPals and those type of companies, they will have to report all the payments for cross-border sales of goods and services to consumers. They will have to report that to the member state in which they are established. and it will be actually collected all in a European database, the CSOP, which you may have heard of already. And that's another tool that the EU, but also tax authorities and national authorities will use to combat fraud. And of course, the payments, that includes also VAT payments.
The lacking piece of information, which is closing the gap, the fraud gap.
Yeah, hopefully.
It becomes one big data warehouse, transactions, payments, sellers' information.
Yeah. No, exactly. I specifically mentioned here, reduce fraud is the main purpose, but reduce administrative burdens is one of the others. Is that really true? What do you think, Jeff?
I think the big selling point of the package is reducing VAT fraud. That's why the member states are fine with it and are willing to speed up on it. If they really want to implement it within 7 months, I don't know. I think that's a little bit ambitious, but I think it will be adopted. I really think it will be. It was already for a big part already set, and the numbers that you mentioned, the billions of euros, that's something you can't ignore unless you are proving to the parliament that it is not true. But I think that's not the case. So
Yeah.
And reducing administrative burdens, I don't know, if you have already set up your multiple registrations and the process is smoothly running, and in most cases it is. After 2-3 months, it's a process which is a monthly or a quarterly process which runs perfectly. So, and having the availability of getting your recovery VAT included in your VAT return right now, locally, that's a big advantage. According to the shift to the one-stop shop, where you cannot include your recoverable VAT.
Yeah.
And I will not be very negative on that one, but we do some VAT refunds in this company for many years, and it's not becoming better.
Yeah.
It's even becoming worse because local tax authorities use it as a mechanism to avoid payments of VAT to foreign businesses. It's still a big trunk of energy that you need to submit and claim your VAT abroad if you are forced to deal with the foreign VAT procedure as such.
Yeah.
I would say, and I know that we already communicated it to the European Commission as well. If you want to shift to single VAT registration and you want to move to a data warehouse system where you are requiring all kinds of data, then it should be easier for member states to pay the foreign VAT amounts quicker and more stable, because all the information is already there. If somebody is claiming VAT on an invoice, then somewhere in the data warehouse, the reported sales VAT is already there. So what's the issue to not speed up on those foreign VAT recovery? So I would say implementing single VAT registration, fine. Extending one-stop shop, fine. Not including recoverable VAT on the one-stop shop, I get it. It's a political item. Not going to recover VAT through a European OSS standard right now. It's still early to do so, but at least they could force the member states to improve and speed up on the recovery processes.
Yeah. Yeah, no, I agree. I mean, I think, as I mentioned before, with the domestic reverse charge mechanism and with the reduction of VAT registrations everywhere, there will be less VAT going around, but you will still have companies that have local purchases with local VAT.
We're still in hotels, we're still traveling, we're still eating, we're
going to events.
Uber taxi,
Yeah,
still
no, exactly. Yeah.
So yeah, nothing happens there.
Yeah, and of course that if you have a company that where you do actually have a lot of local activities and also local input VAT, it is still possible to not use the OSS scheme. So you can still keep your VAT registration, but then of course the whole idea of making it simpler, it falls away.
It's a failure. It's a failure.
So let's see how it will work out in the end. But if you are a company or if you have a lot of local input VAT, yeah, just be reminded that you are now maybe able to claim it back via local VAT return, but that will no longer be possible under the OSS scheme.
Honestly, Bas, if you look to the IOSS implementation and what we got as feedback from our client base on that one, a lot of them who didn't jump on board in July 2021 and are now onboarding or starting to discuss whether or not they want to onboard. A lot of companies still wait for the first 18 months to see how such a scheme will develop and what the hurdles are. So not everyone will jump on a single VAT registration and an OSS extension. I don't believe it. Absolutely not.
Yeah. No, and that brings us to the timeline indeed. So when will companies have to prepare, or when will you have to be ready? Well, following the proposals, this whole reverse charge, the call of stock simplification, or whatever you want to call it, and therefore also that part of the OSS registration and single VAT registration will start from the 1st of January 2025. It seems quite long away, but it means that by then everything needs to be cleared up, and also everything needs to be ready, also from tax authorities' point of view, and from a business point of view. So it's not too long away. And yes, can you wait? Yes, of course you can wait. You can wait until the 1st of January 2028 and see how it works out then. But yeah, it means that for call-off stock, for example, if you are now using the simplification and you don't want to use the OSS scheme, it means that you still have to register for 3 years or whatever you want to use.
Yeah, because the simplification is gone.
Yeah.
So it's either going back to the old system or moving forward to the new one.
Yeah.
Probably for call of stock, it's not an hassle to move to the new one. It's easier,
hopefully.
So I think call of stock's fine. Perfect.
Yeah.
Let's do so.
Yeah.
Reverse charge, I don't know. There's still a lot of discussions there.
What I'm thinking of is if you now apply a reverse charge if you don't apply a reverse charge mechanism, it means that you charge VAT on your sales, on your domestic sales, even if you're not registered not established in a country.
Yeah.
And that's okay. And in the future, you are no longer allowed to charge VAT on your sales.
Mm-hmm.
And in some countries, that means that there is no longer a need for registration, but in some countries, you can't even register because the tax authority simply won't accept it if you don't have any taxable sales. So that means that you have to give up your VAT registration, even.
You're forced to.
Yeah.
Wow.
Which means that we go back to the trick that I learned 25 years ago as an advisor. You are already holding it. Sell one pencil to a private individual and you have taxable turnover. And that means
we did it. We did it in 1993 and 1994.
Exactly.
We actually did it.
And now you all know how long Paul is already doing VAT. Very long time.
Oh my God.
Anyway, I think closing up a little bit, it's we are going ahead with this. There's no way of stopping this. The proposals have been published. Everybody has been able to give their feedback on it. There was a lot of feedback on it. A lot of the stuff that we spoke today about is that was indeed also mentioned in this feedback. But the next step is that the European Council must decide on the proposals. They have to do that unanimously. So all the member states have to agree.
Yeah.
It's not likely that it will happen soon. I went to a conference where the Swedish presidency was the European Commission. Sweden is now the president of the European Commission, and there the person actually mentioned it will never happen before the end of our presidency. The 1st of July, Spain takes over. So it means that Spain will have to take it to the next level. Let's see how far we get. That they don't have too much siestas, right?
But why wouldn't they?
Well,
I think it's for a big part already dealt with.
Yes.
They are all agreed, though the hot items that are always there will probably be smoothened a little bit, or let's shift some dates or whatever, but there will probably some space in the proposal where they can shift. So probably they will just adopt a little bit and then fix.
exactly.
I think it's good to mention that the ECOFIN is planned for the 16th of June, so that will be a little bit of a highlight. Maybe it's good to have our next webinar after the 16th of June.
Yeah, that's what we are planning. And we get back to that on that with you. I think what is good to mention is that the EU Commission mentioned that they are working already on the explanatory notes. I mean, for the e-commerce package, they made a nice booklet with explanatory notes, and I won't say we use it daily, but we have read everything multiple times now. And yes, it is nice to have explanatory notes. There is a lot of gray areas still in there, but we are less gray, so we can help you with that, no problem. But it's good that they will mention that they will make it. So that's very nice. And what they are working on also is they will change the V system, which we already mentioned in one of the previous webinars as well. And they are expecting the proposal to be published in 2024 for that.
Yeah, for the second part there, we can bring in a little bit of a comment from the Dutch tax authorities or the Dutch government even, I know. Because it was discussed in Parliament what the faults were at the government side on this proposal. And I will not bother you that much, but I think the Dutch are quite relaxed in a way. So they will probably work on this one in 2026 or so. That's what they state.
Yeah. Yeah, no, I also heard informally,
which is politics, but okay.
Yeah, and informally, I already heard that the Dutch tax authorities, they have a big backlog with IT implementations and IT systems. That is one of the reasons why the e-commerce proposal was actually postponed, because the Netherlands was not ready. And it's still a mess. Well, sorry, I didn't say that out loud, but they're still working on it. But it's not expected that they will be able to start working on the VDAP proposal in 2026.
They don't have the resources anyhow, so it's not doable. Yeah, probably that will be an issue as well, because the Dutch will not only be the only ones that are tackling this kind of issue. So
yeah,
I expect more member states will probably ask for some space in time.
Yeah,
and that's the flexibility which is in the package as such. You could argue it starts in 2024, it closes in 2028, so there is some space there. You know,
yeah,
let's see what happens there.
Yeah. So again, I think we based ourselves on the VDAP proposals, and right now we have covered all the different parts. We started with the whole stuff about electronic invoicing, DRR, etc. Then we spoke about platforms, and today we discussed the single VAT registration issues. I'm sure we didn't cover everything yet because there's way more, and we can talk about it for hours and hours. If you have anything that you would like to talk to us about, please contact us. If you have any specific questions right now, please raise them. And I'm just quickly looking at the chat. No, there's no new stuff there, but
everyone happy? Well, the next webinar will be the closing one, or the almost closing one, where we wrap up and where we pick up the actual state of play at that time after the ECOFIN, I guess.
Correct.
So
yes.
You can see here's one raising and raising.
Yeah. No, I think that what we will do is we will also keep a close look at what the European Commission is communicating, what the ECOFIN will be communicating on the 16th of June. We will organize the last seminar on this topic in June. We will all invite you. Of course, you will get the handout of the slides and you will be able to look back the presentation via a look back link, which will be sent to you as well. If you have any questions, then please let us know. And until then, thank you very much for your attention. And hopefully we will see you again next time.
Take care. Bye-bye.